Hello, everyone, and welcome to today's event of Florida Sales and Use Tax, the latest updates and hot topics. You're not going to want to miss this. I appreciate everybody being willing and able to come today. I'm David Brennan. I'm one of the partners with Moffa, Sutton, and Donnini. Our firm specializes in sales and use tax issues and state taxes nationwide for that matter. We also handle business and corporate law too. And let me just introduce myself by giving a little bit of a background here. So, with respect to myself, I used to work for the Florida Department of Revenue. Please don't hold that against me. When I was at the Florida Department of Revenue, I focused primarily on sales and use tax issues there. Uh, when I left the Florida Department of Revenue, I came to the firm, and my practice area is focusing primarily on multi-state sales and use tax issues. I used to be an accountant, so that's why I have my accounting and finance degrees from FSU. I went to law school, and I also got my master's of law in taxation from Boston University. So with that, let's jump right into this. If you have any questions, I believe there might be a chat or question feature on this. I'm not 100% sure, but please feel free to ask any questions. I will do the best that I can to answer all questions during today's webinar, but if you do have further questions, you're always more than welcome to reach out to me. My contact information is on the screen here, David Brennan at floridasalestax.com, or you can call me on my direct line of 850-250-3830. What I like to do is I like to start off presentations with just some very basic sales tax stuff to make sure that everyone who's coming to the presentation is on the exact same playing field and page with these types of things. And so in Florida, generally speaking, again, general rule is going to be that sales tax is imposed at a state rate of 6% and a local rate, if there is a local rate, of anywhere from 0.5% to 1.5%. Your mileage may vary depending on the locality that you're in, what county you're in, and it could also depend upon the issue that's being taxed as well, because some different aspects have different tax rates, such as electricity, that generally has a different tax rate than the 6% rate. Also, understanding very briefly the types of audits that are out there are going to be key to understanding why the updates are relevant that we're seeing here and how your clients or you, if you're in industry, could be impacted by this. So for the first type of audit we have is a letter audit. That's usually going to be a limited scope audit. And as you can see there from the description, a limited scope or a letter audit is going to be about a specific transaction. Most notably, it's going to be, for instance, about an aircraft purchase. And that's just an example. There's other instances where, for example, the Department of Revenue can get information from the U.S. Department of Homeland Security through customs, more precisely, and obtain that information to audit that specific set of good or goods that are being brought into the state. So that is a possibility. Self-assessment request, the struggle there always is how much do you assess? Too little, and it might turn into a full-blown audit, which we'll get to in a second, or too much, and then you're paying through the nose for something you might not necessarily have to do. In any respect, self-assessments are not necessarily fun. But then again, what is with respect to this? Then you have your full office audit. Your full office audit is what you think of when you have a sales and use tax audit. It's going to be the auditor usually coming to your location and requesting everything under the sun. They're going to want to see general ledgers. They're going to want to see the profit and loss. They're going to want to see the chart of accounts, federal tax returns, bank statements, and the list goes on. If there's anything that they miss, that would be a surprise because they want everything and they want it now when it comes to that. And usually your full office audits are going to be your most intense types of audits that are going to cover the most areas and have the potential greatest exposure as well in that type of an audit. Finally, a criminal investigation. Criminal investigations, that's absolutely when the individual being investigated or the company being investigated needs a lawyer. And when it comes to that, how do you know that you have a criminal investigation? Well, you know because either the letter that you get in the mail, or the business card, or the email from the person at the Florida Department of Revenue says investigator or criminal investigator or financial investigator, something of that connotation. And that's a tip off that there's a criminal investigation that's going on. So let's start with the first set of changes. The first one has to do with admissions. And as it pertains to the admission statute, you'll see the statutory citation there. And I do try to put the statutory citations on there because I have received comments in the past about how it's nice just to have that on there. But you'll see from the Florida statutes that it's section 212.04, paren 2, paren A, number 13. And that new provision was just added. And before I go any farther, let me just say this. All of these changes are still subject to review and approval by the governor. The Florida legislature just recently passed what's called the tax package with all these changes. The governor could sign off on all of them, sign the bill as is, and it becomes law, or he might choose to veto certain aspects of it. I think with what we have here for today's presentation, it'd be highly unlikely the governor would veto any of these. Doesn't mean he can't or won't, but it's still a possibility. So without further ado, there's going to be no tax imposed on certain types of admissions. So what is an admissions charge? It's usually anything that involves recreation, sport, or fun. Think of it that way. So think of it as your playing golf at the country club, going to play putt-putt, going to a fair, going to a sporting event. All of those types of things are an admissions charge that are usually and normally going to be subject to sales tax here in Florida. However, the lobbying association, I guess, for the tennis association, was able to get this provision passed. And this provision had to do with a couple of different aspects. One, there's no longer going to be a tax on any admissions to the Association of Tennis Professional Masters 1000 tournament. And the same is true for the women's side. There's going to be no tax on admissions charges to any women's tennis association 1000 tournament. So it's the men's and women's side of it. This provision, though, it's temporary in nature. So it's only good from when the law comes into effect, which we'll see when that is towards the end. But it should be the July 1st, I believe, up until July 1st of 2029. So it's going to be a solid 3-year period. Also, there's a new exemption here for Florida universities and colleges. As it pertains to Florida universities and colleges, this new exemptions states as follows, and the citation for it is in 212.08, paren 6, paren A of the Florida statutes. Though exemptions from tax are allowed when sales are made directly to certain government entities. So let me stop there. If the Florida Department of Revenue purchased a brand new car, then generally speaking, that sale should be exempt from Florida sales and use tax because the Florida Department of Revenue should have what's called a consumer certificate of exemption. So they can give the car dealership that consumer certificate of exemption so they don't have to pay tax. The same is true for universities and colleges in the state of Florida. However, this new provision allows an exception as it pertains to state universities and colleges. And it's only when very specific procedures are followed. So when you're dealing with a public works contract, and at the 50,000 foot level, a public works contract is very generally speaking, basically a real property improvement, but for an instrumentality or principality of the state. So the state universities, the state colleges are basically the state of Florida, if you will. So when you're doing a public works contract, there are some slightly different rules than your general real property improvement contracts. But this new rule that's going to apply in this situation is as follows. When you have sales of tangible personal property to the contractor, and that contractor is going to be the one who's performing the work for either directly or as an agent for the Florida university or college. Well, when that happens, that purchase by the contractor can be exempt as long as the tangible personal property that's purchased by the contractor goes into or becomes a part of that real property improvement contract, that public work contract owned by the university or by the College of Florida. Now, the contractor is still going to have to pay tax to the vendor for the goods because this is only good and available through a refund of the tax previously paid and must be done so on a quarterly basis. Now, the key here is the refund, if approved, must be paid out within 30 days of the approval. And we'll understand why more in a moment as to why that's a huge deal, that 30 days. And I think that's great. It's a huge deal in the right kind of way. We're going to continue with our discussion here because there is a lot on this specific exemption for Florida universities and colleges to say that in order to receive a refund, there's certain things that have to be included in that refund application. And those aspects include, of course, the name or the address of the university of college, the identity of the public work project, the name and address of the contractor purchasing the tangible personal property for that public work contract, a copy of the Florida University or Florida College's Florida Consumer Certificate of Exemption, and that's the key. It has to be the Florida Consumer Certificate of Exemption. And the total amount that's of the refund that's being requested. It has to also include a copy of the invoices, not only showing the tangible personal property being purchased and that which is being incorporated into the public work, but also the amount of tax that's paid. You do that, you're increasing your odds for the approval of the exemption. The refund application also must have a document filed under oath by the university or college. So it should be, my recollection is correct, it should be under penalties of perjury. So you really got to make sure that your ducks are in a row. Now, why does this even matter? Here's the reason. If Florida State University, so I'm in Tallahassee here, if Florida State University hired me to build them a brand new science building, that should be a real property improvement contract, or in this context, a public works contract with the associated rules. I would then go to Home Depot, Lowe's, or wherever in order to purchase the lumber, the bricks, the drywall, you name it, in order to build that new building. But because me, the contractor, is not exempt from sales tax, I have to pay tax on that, which means that that tax goes into my overhead cost calculation, and therefore then the university gets passed that tax indirectly as an indirect cost for the overall project. This rule ultimately is saving Florida colleges and Florida universities money, which is ultimately then going to save the state money because it's less for the colleges to have to raise or be appropriated, as the case may be, which means that it's going to save ultimately taxpayers money at the end of the day. I see that we have a few questions here. I'll try to answer those questions here real quick before we move on. The question from the first attendee is a school football game, not subject to admissions, sales, or use tax. And I'd say it depends. So your general rule is, I believe, high school or college football games should not be subject to tax, to the admissions charge, but there's very specific criteria for that. The next attendee asks, how about a greens fee at a golf club? Greens fees, generally speaking, are going to be subject to sales tax because it gives you the right or the privilege in order to play a round of golf or 9 holes, as the case may be. This Nets user asked, do you get any print materials? No, there's unfortunately no print materials available here. And is there a code given for this webinar? Yes, the code is going to be given at the end of this webinar. So hopefully I answered all of those questions. The next change is a change to an already established exemption. The exemption is in section 212.08, paren 7, paren B, 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 B. This had to do with portable gas cans. And what this provision did was these portable gas cans were generally exempt. The old exemption, it only really allowed for gas or diesel fuel cans with a capacity of 5 gallons or less to be exempt from Florida sales or use tax. So you go to your local store, you buy a 5 gallon gas can, should be exempt from sales tax. And I think that's arguably also a hurricane supply as well, which would be exempt for that purpose too. But this exemption is permanent. What was added is propane tanks. So propane tanks that have a capacity of 20 pounds or less are going to be exempt as well. So if you are grilling out in the backyard, then you should be able to go to your local store, get a 20-pound tank, and that will be exempt. Now, remember, this exemption only comes to fruition if the governor signs it into law and effective July 1st of 2026. I see that there's a couple of questions and it looks like they're repeat. Yes, there are going to be continuing education credits provided for this. And another user asks, is the tax exemption only for state colleges, universities? What about private nonprofit like Flagler College? So the exemption that we spoke about, and let's go back to that here real quick. It has to be a Florida state university or state college. So to answer your question, that the exemption should not be available. This new exemption should not be available for private universities. Now, private universities, as long as they have their Florida Consumer Certificate of Exemption, there's still ways to structure those transactions to where the the private university could go ahead and acquire the materials tax-free. It's a bit of a pain and a headache, but it is still possible. And to clarify on the continuing education, yes, there's continuing education credits, not just for lawyers, but for CPAs as well. And we talked about the portable gas cans just a moment ago. So the back to school sales tax holiday. A year or two ago, the back to school sales tax holiday became permanent. So what do I mean by that? The back to school sales tax holiday, it was a discretionary holiday that was allowed at the whim of the legislature and approval of the governor to say, hey, these certain categories of items are going to be tax exempt, but it's not permanent. So they have to renew it every single year. And it changed over the years as to what would be allowed, the thresholds that were allowed for the purchases of the items to be exempt. So, for example, computers, you might be able to spend up to $1,000 under the old rules, and I'm pretty sure it's the same today now. But a year or two ago, this exemption became permanent, and it's codified in section 212.08, print 20 of the Florida statutes. This back to school sales tax holiday, basically the only change from last year to this year is the date range that's involved with the exemption. So the date range, I believe it was for the entire month of August last year. Now it's just moved up basically 11 days. So now it's going to begin on July 20th, 2026 and go through the end of August 20th, 2026. So right until the beginning of the school year, basically. Years past, they had also had one for the July-August area of a back-to-school sales tax holiday, but then they'd also have one in December or January, if you will, for going back to school then. There is no second holiday. It's just this 1 month period that's going to be allowed. So all the other aspects are remaining unchanged. So computers, your monitor, your pencils, your pens, your crayons, your printers, your paper for notebooks, all of that and more should be exempt from tax. Now, there's going to be certain limits, and I alluded to one earlier with computers. So you're going to want to make sure that the computer purchases, or any purchases for that matter, comport with those limits and are not going over. Otherwise, you're going to end up paying tax no less on those items, even though they would otherwise qualify as exempt, but for the price issue and purchasing during that time period. So make sure you make the purchases happen while those items are exempt, because it's a savings. Every little bit helps, in my opinion. Home hardening products. So the home hardening products is basically, think about it as improvements to your home that you can do for hurricane resistance, if you will. And the Florida legislature, they create a whole new statute. It's 212.08, paren 21. So it's right after, I believe, the back to school sales tax holiday. And this new statute's created, and it uses the term home hardening products. And there's several terms of art, and we'll get into in just a little bit. But home hardening products on eligible residential properties are generally going to be exempt. And so the statute, I saw it and it went on for a good ways on it, but it goes through all of the criteria that are required for these purchases to be exempt. So it defines what home hardening products are, the types of products that they have to be, what an eligible residential property could be, so forth and so on. These are very, very precise definitions that, again, all else equal, if you don't meet these very precise definitions, you or your clients are not going to qualify for this exemption. And the definitions are really just so nuanced that it's beyond the scope of today's presentation. But know that they are there, and know that it is something that absolutely should be dug into on a client by client basis to ensure that that client meets the criteria for the exemption. So moving on, how do you qualify? So you have to show the Department of Revenue to their satisfaction that the requirements are met. In my opinion, that's a very arbitrary standard, because what could be to John Doe's satisfaction at the Department of Revenue is not going to be to the satisfaction of Jane Doe at the Department of Revenue. So it sounds like it's almost a discretionary basis to some extent, unless the Department of Revenue comes up, again, assuming this gets signed into law, unless the Department of Revenue comes up with certain standards that all individuals at the Department of Revenue can use and apply. So you're not getting different results depending on who it is that you talk to that day and how they're feeling on that day. It's going to be up to $500 per eligible residential property for purchases that are made during the period. So there is a limit to this. And it's available to the owner, again, only through a refund of taxes paid. So what might be the policy reason behind this? If the state exempts the transaction at the time of purchase, they lose out the money 100%. And so every sale is going to be exempt. But if it's still taxable at the time of purchase, but you have to apply for a refund, not everyone's going to apply for a refund. Not everyone that's at least eligible, I should say. And what that means is the state still is going to come out ahead with some of these aspects. So on paper, it looks great. They've passed this exemption, they've gotten it done, but the refund aspect means only those who are well in the loop of how they can lower their tax bill will be able to take advantage of this and be able to get their money back. To be eligible for the refund, the owner has to submit a refund application to the Florida Department of Revenue. That refund application, it has to contain certain information. If it doesn't, it's probably going to be an automatic and quick denial for that matter. They're very quick to deny and quite slow to approve. But the application, of course, must have to have the name and address of the owner that's claiming the refund. It also has to have the address of the eligible residential property. So the Department of Revenue can determine whether the property is in fact eligible. Here we go again, the sworn statement under penalties of perjury. And that sworn statement has to attest to certain things. How in the world is your average person going to find out what they have to attest to? My guess is that there's going to be a form created by the Florida Department of Revenue for this sworn statement that's going to allow individuals to just print it off and say, hey, here you go. And quite frankly, to that matter, I think the Department of Revenue is likely to do a tax information publication or TIP on this issue with a suggested example affidavit that owners can then fill out to submit with the refund application in order to have a fighting chance at getting the refund. There's also going to have to be copies of the receipts showing what was purchased, that it is an eligible item that's a home hardening product, and also that it shows that the sales tax was paid at the time of purchase. It's going to also show when the purchase was made to ensure that it was done during the correct time frame. Here's the key. An owner may only submit an application for one eligible property. So make sure they make all their purchases, and then once they're done, assuming they have or have not hit the limit, they file the refund application and they get it done that way. That's going to be important because they're only going to have one bite at the apple here. And if they do a little bit but don't meet the threshold and then they do more and would have met it, that's money on the table for them, quite honestly. The refund applications, they can only be, again, assuming this is signed into law, they can only be submitted between July 1st and July 26th. Excuse me, July 1st of 2026 and September 30th of 2029. Refund applications submitted before that period or after are probably going to end up being denied, subject to the legislature changing something. The Department of Revenue must, and I emphasize that, must determine whether that refund meets the requirements and approval of the exemption within 30 business days of the application's receipt. So that's about a month and a half, if we're talking calendar months, about a month and a half after the application submitted. Then approved refunds, and this is a really big deal part for me, and we'll see why here in just a minute. But approved refund applications, they have to be paid within 30 business days after the application is formally approved. The statute doesn't say what happens if that's not occurring, but I'm pretty sure something could be thought of to ensure that the Department of Revenue complies with their statutory duties. As the state agency administrating tax law, they absolutely have an obligation to do, but don't always do. And you see there in big caps, definitions matter. And that's what I was speaking of earlier is you really have to dig into the definitions for all of these terms, what a home hardening product is, what an eligible residential, what an eligible residence is, excuse me, so forth and so on. Now this statute, it's going to be repealed effective June 30th, 2030. Again, subject to the legislature making some sort of change to it in the future. I see there's a couple of comments here. Seems like the cost to assist in research and filing will outweigh the refund. It absolutely could be. I couldn't agree more with you on that. Is the $500 limit applied to the sales price or the sales tax amount? My recollection, and I'd have to double check the language in the bill, but my recollection is it's going to be $500 for the refund amount, so the sales tax that is at issue. If it was the $500 of product amount, and you could buy one window and hit $500 immediately. And the tax for that might be 30 something bucks, depending on where you're at. And yes, it seems like another comment about on the cost benefit. So all good points and all absolutely 100% correct on all of this. Let's see if there's any other questions on this. What is the eligible period? And the eligible period, I think we just discussed, is the refund applications have to be submitted between July 1st of 2026 and September 30th of 2029, and that this statute is repealed effective June 30th, 2030. Let's see. An example of home gardening is, excuse me, home hardening is garage doors or hurricane windows, correct? So my recollection of the statutes would be that it has to be a certain type of impact resistant garage door and impact resistant windows, doors, things of that nature for the home. So yes, there's again very specific criteria, but yes, that is correct. Isn't propane already exempt as a household fuel? It is, but you have to go through the steps of doing it. Whereas this is a specific exemption. So you go to the store, you buy a 20-gallon tank. My guess is if you go to Walmart and you buy a propane tank that's 20 gallons or less, let's just say it's 15, that they're going to charge you tax on it because they don't know how you're going to use it. Whereas the residential fuel exemption that this user was asking about, that provision kicks in if, let's say, I have a propane stove at my house and I have to have a propane company come out. Well, that propane company is going to already know that it's coming to a house, it's for residential use, so it should be exempt from tax when they fill up my propane tank that's on the exterior of my house. So that's how I would differentiate the two. And no, you're not getting any print material. So I think we answered that. And let's see. How about an entry door? So I think that an entry door could qualify, again, if you meet the requirements of the statute. Great questions. Keep them coming, guys. I'm doing my best to hit on all of them. I might miss some, and it certainly would not be intentional. With respect to purchasing motor vehicles, sometimes you can have your sales tax allocated to a scholarship or contribution fund. And so for this fund, it changes one of the definitions of the motor vehicles. Really, this is going to apply to your motor vehicle clients more than anything else. So your new franchise car dealers and your independent car dealers. That's the heads up for this one. And what the definitional change does, again, if it gets signed into law, is it's going to exclude heavy trucks. But those heavy trucks have to have a vehicle net weight of 8,000 pounds or more. So anything under that, if it's still a heavy truck, it qualifies, generally speaking. What are the dates for purchases to be eligible? I assume that that question involves the home hardening exemption. And so for that exemption, I don't know that it's necessarily that there's a date range for the purchases. It's just for the refund application from what I recall seeing in the bill. But my suggestion would be, look, it's almost July 1st as it is. And let's just go back. It's almost July 1st of 2026 as it is. If the homeowner can wait just 3 weeks, then my suggestion would be wait the 3 weeks. I'm going to be getting new windows, so I think I'm going to wait 3 weeks in order to sign this, in order to get the exemption here. But I would suggest waiting the 3 weeks to where it's very clean that the purchase and refund application occurred between July 1st, 2026 and September 30th, 2029. I think there's an argument that could be made that, yeah, you could purchase it on June 30th, 2026, but since the application has to be done starting July 1st, I think the department might take the position that no, because the purchase was in July 1st when the statute became in effect, then it doesn't count. And remember, this is going to be an exemption. And the rule of law in Florida with exemptions is the burden is on the person claiming the exemption. So if there's any doubt, any ambiguities as to qualification for the exemption, the Florida Department of Revenue generally wins when it comes to that. And that's why my suggestion would be just purchase it starting July 1st. This next question says on home hardening, most time homeowners would hire a contractor for installation of windows, doors, etc. I agree, and I think I might know where this statement's going. If so, the contractor doesn't reflect sales tax because the contractor pays it individually. How would the homeowner benefit? That's a great point. So in that situation, what the attendee is commenting on is a real property improvement contract. So if I have a real property improvement contract, then the contractor is going to go ahead and not charge me sales tax under the general rules, and rather the contractor would go ahead and pay the sales tax to wherever they get the home hardening products from. There's an exception to that, and that's if you meet what's called a 3D contract. And the term 3D comes from Rule 12A-1.051 paren 3 paren D. And that basically means that it's a sale of tangible goods where the contractor would charge sales tax in that instance. It's rare, but it's a possibility. So how does it benefit the homeowner? The homeowner goes, say, to Home Depot or Lowe's directly and purchases these items, or goes to a garage door company and just purchases a new door. It's unlikely, but that's where the benefit will be. No, the slides will not be available after this course, unfortunately. And then, what is home hardening? Great question. And it's a statutory definition. I don't have that on the slides because it depends on what it is that you're doing. It could involve garage doors, windows, or just regular doors, but they have to meet certain criteria for that. And the eligible period to answer this other attendee's question is what's on the screen here, July 1st, 2026 through September 30th, 2029. So let's move on. So I think we discussed the contribution credits. We did. Refund applications. And this is what I was getting at when I was talking about refund applications and why that 30-day period is such a huge deal for the Department of Revenue to have to get on their feet and get it done. So refund application shall not be processed until it is determined complete. That language has been stricken. So arguably what that means now is a refund application can be processed even though it's not complete. Fair enough. Now, if the Department of Revenue does not notify an applicant of any errors or omissions or request additional information within 30 days of the application receipt, that's the key, then interest is calculated based on what we'll get to in a moment. Interest accrues on the 91st day following the postmark date or electronic submission of the application. But the Postal Service doesn't always postmark things anymore. I don't know why, don't ask. But if the application is mailed and there's no postmark date, then it's the 91st day from when the refund application is received by the Department of Revenue. Despite the above interest calculation, and I think that this is a self-serving provision that the Department of Revenue probably asked be thrown in when they were asked about this bill. If the applicant challenges the denial of a refund during the informal or formal protest process, formal protest is litigation, informal, you're still in the agency, and then provides additional information, interest only then begins to accrue on the 91st day following the date the additional information was provided. So what's the moral of the story here is provide everything up front so that way the Department of Revenue is in the hot seat and don't wait till later on. That's my suggestion. I think that there's some arguable wiggle room here, but that would be an offline conversation, quite honestly. The notices issued by the Department of Revenue, whether it's for an approval or denial of a refund claim, if applicable, must state the amount of interest to be paid on the refund application and the date upon which the accrual of interest begins. I think this is a huge win for taxpayers because when they send you the interest on it, you have no idea when the interest will have started on it, and you're left to guess, okay, well, I think it's this date, but that doesn't make sense. If it's clear that there's no ambiguities, the department can't hide behind calculations that the average person isn't going to understand. And so that is a huge win. It applies only, all of these changes that we're talking about here only applies to refund claims that are filed on or after January 1st, 2027. So there's still another 6.5 months for them to get their act together. Now, Will refund applications be processed faster? I don't know. The reason why is the current time for processing a refund application is 600 days with the Department of Revenue. So it used to be very quickly, but maybe 2 years ago or so, there were some changes. I don't know exactly what those changes were, but refund applications ground grounded to a halt. And they came up with a 600-day time frame to get a decision out of it. Now, as a firm, we've got some tools at our disposal to make that 600 days go a lot faster. Again, that's an offline conversation, but there are ways to force the Department of Revenue to get their act together on a case by case basis and get it approved. So if you have clients that have a sizable refund application and it's just been sitting indefinitely and you cannot get the Department of Revenue to act, I have a solution for you on that. But again, that's an offline conversation. Let's see, we talked about what the dates for the purchases to be eligible are. On home hardening, yes, we talked about the contractor. Will the slides be made available? No. Does your firm also practice reemployment tax? Yes, we do. Our firm, as a general nature, handles all tax types that are at the state and local level. So whether it's sales tax, reemployment tax, um, corporate income tax or income tax if it's another state, property taxes, you name it, whatever tax it is by state or locality, we handle it. We just don't really do the federal side. It's outside of really our area of expertise. So there's again, a renewal of a temporary exemption relating to hunting, fishing, and camping. This exemption, again, I can't stress enough, is temporary. So starting September 1st of 2026 through December 31st of 2026. And what does it apply to? It applies to ammunition, to firearms, think your long rifles, pistols, shotguns, things of that nature. Firearms accessories. So I've got a good number of the accessories there. It's not all of them by any means, and please don't take this to the bank. But things like barrels, your cases or range bags, charging handles, cleaning kits, hand guards, holsters, internal parts components, magazines, pistol grips, shooting chronographs, mats, rests, bipods, sights, optics, and so many more that I don't have the ability to squeeze on here are exempt. So if it's an accessory and it appears in that bill, it should be exempt. It also includes bows, includes crossbows, and then the accessories for both bows and crossbows. And the reason why I'm going through all this, I think we're having some people joining by the phone so they don't have the benefit of seeing what's on the screen now. But it also includes for bows and crossbows your arrows, your bolts, your quivers, your releases, sights, optics, and wrist guards. For camping, camping is back at the forefront again for continuing with the exemption. Camping includes tents that are equal to or less than $200, sleeping bags, portable hammocks, camping stoves, collapsible camping chairs that are equal to or less than $50, camping lanterns and flashlights that are less than or equal to $30. Fishing supplies. So with fishing, I'm sure we've got a few people that love to fish on here. Which, by the way, as a little side note, our firm had a tarpon tournament, I believe, and I heard that that was a blast. So we've got some people that love to fish in our firm, but I'm sure on today's presentation we do as well. So for fishing supplies, if you have rods or reels, it's going to be $75 or less individually, or if combined sold as a set, it's $150 or less. Tackle boxes or bag, $30 or less. Bait or fishing tackle would be $10 or less individually, but if sold as a set, $20 or less. That fishing supplies exemption, it will not be applicable to those that are engaged in commercial fishing. So you can't just go and buy all this stuff as a commercial fisher. There are other provisions for commercial fishers that are more generous that would allow them to purchase other things. But again, that's outside the scope of today's presentation. The Another user asked, who is the attorney for reemployment tax? Would it be you? Yes, yeah, I have handled, I believe, some reemployment tax in the past and a couple of others in our firm. My contact information, I'm gonna present it again at the last slide. It should also be in the emails that you received for today's presentation. If you need to reach out to me on that, I'm happy to chat. And I don't think we have, let's see. So this other user makes some comments that some Ford diesels might exceed the 8,000 pounds, and I think that's going back to the definition of motor vehicle for the contribution credit exemption. So that's an excellent point. And yes, absolutely, some of those motor vehicles will be excluded and no longer eligible. I couldn't agree more. With all of these changes, the effective date for the exemption, unless it was said otherwise in our discussion here, it's going to be July 1st of 2026. So keep that in mind. That's the effective date. And I know we had some discussion on the home hardening products. If you bought it on June 30th and did the application on July 1st, I would strongly suggest waiting to do the purchase until July 1st, if at all possible. Now, there are certain industries that we are seeing a lot, and I mean a lot, of targeting by the Florida Department of Revenue. So the targeting number one on my list is aircraft. I handle a ton of aircraft audits, protests, and litigations. So what's the Florida Department of Revenue doing on that? They are looking up in their database, the FAA database more precisely, to see who has a Florida address. They're getting information from third parties. So very true story that I'm going to tell you here. A couple of clients we represented, they were audited, and I found out through certain channels that a company turned them in, these aircraft owners in, because this company, their whole business process is apparently just to make money off of aircraft owners by getting the aircraft owners to pay tax to the state. Then that aircraft turning in company, if you want to call them that, gets a reward, a cut of the pie, if you will. So that's a huge incentive. And it's a great revenue source for the Department of Revenue because you can have an auditor make $2,000 and do a $1 million assessment on an aircraft. So the return on investment for them is very high. Nail salons. Oh my goodness. This is a huge case. It shouldn't be as much of an issue going forward, but the issue has to do with commercial rentals. So if you have nail salon clients, they are usually going to use independent contractors, your 1099K contractors, to provide the actual service. Well, the Department of Revenue says that the amount of payment retained by the nail salon that's not paid out to the contractor for that manicure, pedicure, if you will, that is imputed rent that's subject to tax. And for those clients that have gone with us, we have been getting some incredibly amazing settlement offers for our clients in that industry. It has been an incredibly great result that the department, because of what we have done for these specific groups of clients, we've gotten, all I can say is are just amazing results for them. I don't know that if you represented a client before the Department of Revenue for a nail salon industry that you'd get the same result that we would get. But these results, all I can say are very good and they're fair because these issues should not be subject to tax to begin with. There is a comment from someone that says, I thought commercial rent is no longer taxable, and that's correct. It isn't. It was repealed effective October 1st of 2025, but they're still doing audits for the past 3 years. And the past 3 years go for periods before of October 1st, 2025, which is why this is still going to be an issue and has been a huge issue where they're just turning out these audits left and right. Another user says, be careful, most references to vehicle weight limits usually reference the gross vehicle weight rating. Correct. And that's a great distinguishing factor that the statute says net vehicle weight. So that's a great point by that attendee. Restaurants. So restaurants that use Uber Eats or DoorDash or Grubhub or any of those other delivery services, those restaurants have an issue because The department's position is you have to prove that Uber Eats paid the tax and did not pay it to you. And so it's a song and dance with them. They assume that the restaurants are guilty until they can prove their innocence, which is the case for so many over the years that I've seen. I didn't believe it at first, but I see it day in and day out that the Florida Department of Revenue truly does believe taxpayers and businesses in general are guilty until proven innocent. Until you understand it and accept that fundamental concept, nothing that the Department of Revenue does makes sense. And it also makes those few good people that you find and work with, and I have found some, and I love working with them, all the more valuable because those are the reasonable people that will go to bat for you, for your client, to get stuff done. And that is so important when you have ultra aggressive directions coming down to certain personnel, auditors, and the like, saying assess it and push it up the chain. And that is not how things should be. We're also seeing use tax audits in general. It can apply to any of the industries we've discussed, but also I think we had discussed previously about customs and US Customs. You're absolutely going to see use tax audits from there and many other aspects. So that is going to be a huge issue here as well that we're seeing. And of course, the Department of Revenue is an equal opportunity extorter, so they are willing to legally extort anybody that they can in order to get the money that they believe is owed, even if it's not. And that's the sad thing, because really, from what I've seen, the Florida Department of Revenue has lost their desire. Not everybody, but a good number of people have lost their desire to genuinely help taxpayers and businesses to get to the right amount. Instead, they just come out up with arbitrary numbers and say, hey, here's the assessment, prove us wrong. And that's where the really sad part comes in. I think that, let's see. So if you have any questions, here's my contact information on the screen. Let's see. I see another attendee just commented, is it a good idea for any restaurant that does business with delivery services to get a resale certificate from the delivery service to cover themselves against the Florida Department of Revenue? 100%. I couldn't agree more with this user. And that is a great standpoint. When you're doing business with Uber, Uber Eats, DoorDash, things of that nature, absolutely get a resale certificate from them because that should be exempt from tax. Now, the Florida Department of Revenue might say, well, we don't want to accept that resale certificate because we want to make sure that Uber Eats didn't pay you, the restaurant, any of the sales tax. So if that happens, then it's going to be a bit of a fight. But I couldn't agree more that absolutely you should be getting a resale certificate from anyone. The next user asked, in regards to the Uber Eats audits, what can a client do proactively to obtain support from Uber Eats that tax was paid? Usually the statute requires and the contract provides that Uber Eats and those other third-party delivery companies will be paying the tax. And I think by statute they should be. But again, that doesn't necessarily mean that the Florida Department of Revenue will honor that. But the easiest place to start is with the agreement to ensure that it says Uber Eats or what have you is actually, in fact, collecting and remitting the sales tax on the restaurant's behalf. That's a great point. Let's see. I think we've got, do we get a certificate to show our governing bodies? I'm not sure exactly what that question is really asking for, but if you'd like to reach out to me privately, I'd be more than happy to answer it. The course code for if you're a CPA, is the DBPR course code at the bottom there. If you are a Florida attorney, then your Florida bar course code there is at the bottom. In a couple of weeks, so give me 2 or 3 weeks if you don't mind, but each attendee on this presentation will be getting a certificate of completion with both of those course codes on there, and it will have on there what you need to be able to show proof of that. So you will be getting that as well. But again, I just can't stress enough, give me 2 or 3 weeks for that. If you have any questions, My email is on the screen there, David Brennan at FloridaSalesTax.com. My direct line is 850-250-3830. I know sometimes clients will ask for last minute questions or say I have a last minute filing deadline. I need help. You're more than welcome to reach out to me anytime, especially for those last minute issues. I know how that goes and we're happy to help. And if you're also looking for something to do on a Saturday night, I've got a YouTube channel. It's Sales Tax Lawyer. So if you search YouTube for Sales Tax Lawyer, not only will this presentation, this video, I should say, eventually make its way up on there, but you'll see some other great stuff that's on there as well that could be incredibly helpful. Like, subscribe for all that as well. And thank you guys so much for coming to today's presentation. Y'all have been a great active group, and I really do appreciate it. Hope you guys have a great day. Take care.